Hey, good evening, everyone. Hope everybody's doing well. This is Forex Breezio, and we are going to talk about a potential supply and demand setup in the futures market. So let's get to it. So I hope everybody's doing well. I know it's been, again, a while since I made a video, and this will just be a pretty focused one here. So what you're looking at here on the screen is the E-mini Dow Futures. So this is the futures market for the Dow stock index. Okay, and this happens to be the June contract, which is the front contract in place right now. Now, just a quick look at the higher time frames. Okay, and here we are on the 4-hour chart. And you can see this, we had this impulsive move up, and then we've been correcting back down, and are now back down to this level here where I have this rectangle drawn. Okay, now I want you to just look, well, let's go back to the 4-hour. Actually, let's shorten this up a little bit. Alright, so looking at the, let's go down to, I don't know, let's just say this is a 3-hour chart. Now, one thing I want you to look at here is this move up compared to this move down. So now this happens to be a 3-hour chart, but it doesn't matter what time frame we look at. Let's see from this first blue candle at this low here up to this one right here. Let's see how many candles that is. I can get this cursor lined up. Okay, so that is 14 candles. So 14 3-hour candles to go from this blue candle up to this one right here. Okay. Now let's see how many from this low here, from this first purple candle to where we are right now. Okay, and that is 52. Okay, so it's literally more than 3 times the distance that it took it to go from here to here and to come all the way back. This is literally 3 times the distance. Okay, now just looking at that, you know, impulsive versus corrective price action, this is something worth looking at. Now, again, guys, I'm not saying this is going to go up, and you should certainly not make any trading decision based on anything in this video. I'm just pointing out something that I have a very close eye on, because you can see that we did make a higher high here, and then we went down and made a lower low and a lower high, and so theoretically this market could be trending down, and ultimately it could go down more, but I do think that there's some there will be a bounce in this asset, at least in the short term. Okay, so now if we go back to the 1-hour chart and we look here, you can see I have this rectangle drawn basically down here at the bottom, and I picked that because if you go to a short time frame, about a 15-minute chart, the last bearish candle before this bullish candle right here, the range of that candle runs basically from, you know, the top edge of the rectangle to the bottom. So I tried to go down to a shorter time frame and locate kind of that last, in this case, the last bearish candle. And I draw the rectangle and I extend it out. And you can see today, with the price action today, we came right all the way down right into this zone. Okay? Now again, guys, I'm not saying this is going to go up, so please don't go and just say, oh, go click the buy button because Forex Breezio told me to and said it was going up. I'm going to look and wait for some bullish price action. So what I like to do is go down to like a 15-minute chart, and I'm going to look for something, you know, obviously right now we're in the overnight session. The market is open, but I don't trade during the session. The volume's very light, and there's no real sustainable moves that generally happen this time of night. Okay, so I like to trade after the Chicago Open, which is 9:30 a.m. New York time, and I usually actually like to wait about an hour even into that session, but we'll see. Okay, for the futures market. So here we are on the 15-minute chart, and so basically, again, we're not really doing anything, just moving sideways now. You can see over here, this is a price alert I have set on my chart, and basically where I put that alert is essentially just above this last swing high, which was right here. This was the last swing high we made before we came down and made a new low. We do have a swing right here, but you can see we did not make a new low the last time this came down. We had this little swing high, came down, failed to make a new low, which, you know, could spell, you know, even more confidence for a move to the upside because we could not make a new low. Again, guys, don't go out and buy this just because of what I'm saying, okay? Because, you know, you could wake up tomorrow or in the market open and have this thing just blast lower. And I wouldn't be surprised, actually, if we push down one more time and, you know, try to challenge this low or the low of the box, kind of a liquidity grab for people that are trying to pick a bottom. They put their stop down here underneath this swing. The banks push the price down one more time, trigger off all the stops, and then it goes. So we could see potentially, if we're going to go up, we could see it just kind of go, you know, right from here, right? Or we could see it go down, take out these lows right here, maybe even spike below this rectangle, right? Wick out, you know, throw a wick down there, and then turn and go up, okay? If we're going to go higher, okay, we could see something like this. So I'm going to be very patient with this, okay? Now, if we end up, you know, getting a big bearish move where prices blast right through this area, you know, closes on the lows, and then, you know, comes back up, retests this, okay, and can't get back into this range again and then goes again, then obviously my bias will switch to the downside, and that's what I'm talking about, okay? But my primary thought right now, just looking at this price action, is that this is what we're going to see. We're going to see either a move up from here or another retest of these lows and then go. And so I'll be waiting and looking for some nice bullish price action. I really like engulfing candles. I suppose you could, if you wanted to, you could use a trend line on this, maybe connect these two highs here on the short time frame and say, you know, when we breach this this trend line, then that would be a good sign. You know, or again, just maybe take out this, you know, a recent swing high over here or over here, depending how aggressive you want it to be. But remember, guys, if you wait for a trend line break, and I'm not a big fan of trend lines anymore, but if you wait for a trend line break, what you could see, though, is you could see price break the trend line, okay, and then come back and retest the lows. And so your stop loss would have to be much wider, because now instead of getting in down here on some bullish price action, you waited until the price broke the trend line, and then, you know, in almost invariably a retest of that area is going to happen again, and now you're going to end up going into drawdown. Maybe you get scared into closing your position, or they run your stops, whatever. So I'd be more inclined, guys, just to see what price does from the levels it's at right now, whether it comes down here, retags these areas, and then we get a nice bullish candle to the upside, then I would jump in right at that point, okay? And as far as what time frame I like to enter on, the 15-minute is kind of my preferred. I think the 5 is just too short. But if I get a nice solid 15-minute, say, bullish engulfing candle to take out all the recent price action, and wait for that candle to close, guys, because this is how they fool you. Again, people want to jump in early, so you see a nice big, you know, bullish candle forming. It's at the highs, and people jump in right there, only to see that thing completely collapse and end up with a big wick and price either, you know, going back into the range or turning down, and you end up getting sucked into a bad trade. So that's why you can use the 15, because it's short enough where, you know, you can still get a good entry. You know, wait for it to close, and if it closes up around the highs of that candle, that's an excellent place to get in. But if it fails, you know, then you don't get pulled into the trade. And at the same time, because it's a shorter time frame, again, you know, you can have a good fill. Whereas if you wait for the 1 hour, let's say, or certainly anything higher than that, you could potentially be getting, you know, a worse fill, because by the time that 1 hour candle closes, you know, a lot of price action has gone by. So I think the 15-minute, you know, is a good compromise when you're trading these. Okay, so that's my opinion. I like to use the 15-minute as my entry candle, but I will wait for that candle to close, even if it looks really tempting, because at this point of what this trade could do, if it works out, that's going to be nothing to wait for that and have this thing go higher. Okay, so back to the higher time frame again. Let me get this off of here. Okay, where would I be looking for a take profit if I'm triggered into the long? Well, my first area of opportunity would be back up here at this supply area. Although we've already tapped this, so you can see we went down, we came up, we re-tapped this area and went down again. So I have a feeling if it does get up here, while it might run into some resistance up here, I think it ultimately will go through there. But I would at least have probably an initial target up in this range, and then maybe move my stop up, and then my secondary target would be back up here at this supply area, which has not been challenged, back up here. Okay, you can see we had this big drop. We had this this little sideways candle right here. So anywhere right in here, from about here to here, would probably be a good secondary target. Okay. And from here, that's anywhere from 700 to 990 points, which is depending whether you're trading this as a micro or an E-mini. If it's a micro and it gets up to here, this is about a $450 or so move. If it's the mini contract, which is kind of the full contract, and it got back up here, you'd be looking at 10 times that, so you'd be looking at like $4,500 a contract, okay? Because this happens to be the micro, which is the MYM, as opposed to the full contract, which is the YMM, which is this one. But you can see it's going to look exactly the same. It is the exact same chart. It's just that this is the $5 a point, as opposed to this one, which is the 50 cents a point, because it's 1/10 the size. But the chart is exactly the same. So again, it's the MYM, okay, which is the micro E-mini Dow at 50 cents a point, or the YMM, which is they're just the regular E-mini Dow at $5 a point. Okay, again, same chart, same analysis, same everything. It's just a matter of what your risk is and your account size, which one you want to trade, because again, the stop loss will also be 10 times the size too. So that's leverage, right? So anyways, back to the analysis. This is what I'm looking at. So I just wanted to throw this out there, guys. I'm going to go ahead and probably end the video now. And tomorrow, hopefully, we should get resolution on this pattern one way or another. And I will try to make a follow-up video once we kind of know what this thing is doing. If we break lower, that's fine. Then our bias will change back to the downside. But right now, this is definitely an area I'd be keeping an eye on. Again, kind of an impulsive move up, not very many candles, and then this long, slow, choppy, overlapping move back down, right back to the origin of this original move up. Is kind of a prime setup for a supply and demand trade. In this place, a demand trade where price comes back into demand and then shoots up. Okay. So I hope that was helpful, guys. And again, you can do this in any market, any time frame. It doesn't have to be futures, Forex, whatever. I trade Forex, as you guys know, but I do dabble in some futures too. And I only look at a few different futures assets, all indices, the Dow, the NASDAQ, and the S&P. That's all I look at. And I'm looking for just clarity, the ones that seem to be the clearest. And this one today happens to be the MYM and or the Dow. And then, we'll see what happens tomorrow, whether this works out or not. Okay? So, guys, questions, comments, please drop them below. Hope you enjoyed the video. Smash that like button, please. Take 2 seconds to do that right now. Thank you very much. And if you're just finding the channel for the first time, click subscribe and ring that bell notification icon so you get notified when I post new content. Everything here is always free. I'll never sell anything on this channel, and that's just the way it is. Okay? And so, like I said, guys, so if you have any questions, comments on this, That's just kind of supply and demand at its most simplest form. Nothing magical about it, and just my take on it. All right, guys, again, make your own trading decisions. Don't trade based on anything I'm telling you here. I could be completely wrong, and, we'll see how it goes, and so we'll make a follow-up on this. Have a great rest of your night, guys. Talk to you soon. Thanks.